What is up, my fellow YouTubers? Welcome back to MK Chip Money in Life TV. Today, I'm gonna be sharing with you my simple strategy for picking investments. Since we're talking about 401k investing, this is the third part of the series, and I'm gonna be sharing with you my strategy for picking good mutual funds. When I was younger, I was always interested in the fact of how do some people go from very humble beginnings or very basic beginnings and accumulate wealth over time. Well, throughout the course of my life, I read and learned several things, and I knew one of the pieces of that puzzle was knowing how to pick good investments. I don't know if you're like me, but I read dozens of books on investing. In fact, there are hundreds of books, hundreds of articles on the subject of investing. But what I found is that most of the material gives you no process for figuring out how to actually select good investments. In this video, I'm sharing my 5 simple techniques that I use before I choose an investment. This is my investment process. Now remember, if you've been following this series, the whole purpose of this series is to, one, so you can learn about how to invest in your 401k, but also so you can improve the rate of return you're getting on your 401k investments. Any questions you have on this stuff or about this process, please leave them in the comment section down below and I will make sure to respond. Just be thinking of questions as you're watching this video. Okay, so let's dive into this process. My first criteria when selecting an investment is, do I understand it? Do I understand what I'm investing in? A successful investor once told me, said, Mike, if you're going to invest, you should really know what you're investing in. He said, do you understand it? Don't just go into real estate just because it sounds good. Don't just pick mutual funds because they sound good. But when you're going to invest, is do you understand the investment? And that really stuck out to me because then I knew that I was not going to invest in something unless I took the time to understand it. I didn't have to know all about it right at that moment, but I had to be willing to do the research or say, okay, if I want to learn this, it sounds interesting to me, I need to spend some time to do some research before I invest my hard-earned money into that investment. Whoa. And so by do I understand it, what I mean is, since we're talking about the strategy for picking mutual funds here, is do you know what that mutual fund is made up of? Do you know their long-term average rate of return? You know, what are their expense fees and ratios and things like that? Does that stuff make sense? So that's what I mean by do I understand it? Now, this seems like a very obvious criteria. If you've never done investing before or tried to select good mutual funds, you're actually gonna start here, even before the first one. The reason I say that is because when you actually go, if you remember in our last video, we looked at Vanguard, Fidelity, and John Hancock websites, and I showed you where to go to find the mutual funds. Well, the mutual funds have very weird names, and they have ticker symbols like stocks. So you're not gonna know just by reading the name, you're generally not gonna know what that mutual fund is made up of until you actually click into the link and drill down into the detail. So that's why when I actually do this process, I actually start here. The first thing I do is look for the highest rates of return over a 10+ year period of time. Vanguard has 126 funds, as you guys saw in my last video. So in those 126 funds, I found there were 5 to 10 investments that were all-star performers. So right there, I just cut my research list from 126 down to 10. Part of the purpose of us going through this criteria, guys, is to save time. You might have Fidelity, you might have John Hancock, you might have Vanguard, I don't know what you have, but find a way to analyze the information in your 401k plan so you can see which funds in your plan have performed the best over a 10-year period of time. In my 401k plan, out of the 60 investment choices I did, that I have, only about 5 to 10 of those were really good performers. I want to try to maximize, get the highest rate of return for our money, and I'm sure you do as well. Number three, or the third criteria I look at, is the global economy. So by global economy, think of what's going on in the world. Does that investment make sense? Like for example, if we're trying to invest in oil, well, are we trying to move away from oil? Or are we trying to go more closer towards oil? So it might not make sense to invest in oil, right? If you think that 20, 30 years from down the road, we're not gonna use as much of it. Think long-term, big picture of how the future trends are gonna impact your investment performance. Because we do not wanna be investing in something that is not gonna be relevant 10, 30, 40 years from now. Number four, minimum rate of return. When I'm sorting through my 401k investments online, I don't know about you, but I don't want to invest in something that's only gonna show me like a 3 or 4% return. It's gonna be too low. And I know I'm younger, so I'm able to take higher risks to get higher returns. I've made a pact to try to not to go below a 6% annual return on my investment after fees are considered. So I am considering fees. The fee, a front-loaded fee, am I paying the fee on the back end of this mutual fund? Or do I pay a fee every year, like a percentage, like 1%, 2% on this mutual fund? So I really do take fees into consideration, guys. But at a minimum, this is me personally, and you can choose what you want to do for you, guys, but I'm looking at least a 6% or greater return on my money. The fifth criteria, guys, I use is I want to consider risk. We always want to be thinking about risk. And by risk, I had to think about, hey, how old am I right now? When do I want to retire? And I encourage you guys to ask yourself those questions as well. How old are you? When do you want to retire? How do you feel about taking some risks? Now, my risk philosophy or risk preferences are probably going to be different from yours, and that's okay. Every single person is gonna have a different comfort level with risks. Some people are in the low risk scale, they're very conservative, they don't wanna take a lot of risk. Other people wanna take a very high amount of risks. So it really depends on the person themselves. So here's my thoughts on this, guys, and you can disagree with me, totally fine. So for me, I want a higher rate of return on my investments. I am willing to take the risks. I'm not a big fan of bond funds. And that's because I know that interest rates are at an all-time low. So likely most bond funds, if the Federal Reserve raises interest rates, the value of those bonds is gonna go down, which means if you have money invested in those bonds, it's gonna go down with it. Especially with inflation being at what it is, I know the Federal Reserve says inflation is at 2%. I personally do not believe that. I don't think it is. I think inflation is really like 5%. I think it's much more realistic. Because if we look at healthcare, if we look at the cost of college, we look at the cost of automobiles, the cost of those things just keeps going up. Our dollar is continually losing value. As they print money, as more debt's brought into play, asset prices are pushed up, and really what that means is our dollar is not as strong as it used to be. And so that's why I would rather shoot for a higher rate of return. I am not okay and not comfortable taking only a 2% return, 3% return, because I think it's too low. Because eventually, in the long run, I'll be getting poorer over time. If the inflation rate's at 5%, I have to take that in consideration, and I have to shoot for something that's 6% or greater to stay current with the economy. So always consider, but you do personally have to consider risk for yourself, guys. How much risk are you willing to take? But I can tell you this, go back to principle number one, if you understand what you're investing in, you're gonna feel a lot more comfortable than if you're just randomly throwing darts at a board, guys. We're not doing that here. So this is a process that I use for picking mutual funds. You don't have to use it yourself, guys, but I just wanted to share with you what I do to get the rates of return that I do. So take it for what it's worth. I hope it helps you. If you have any questions about this, let me know. I'm happy to answer them for you. But overall, it's just coming up with you have to come up with a strategy for yourself. Maybe you'll mimic my strategy, or maybe you'll come up with something completely different. It's okay, it's whatever works for you. But find a process, a strategy that you can implement over and over and over again in your investments. And what's gonna happen is you're gonna get a higher rate of return, likely gonna get a higher rate of return. You're going to feel more comfortable about it. You're gonna learn how to manage your risks, and over time, you're gonna become a better and better investor. Less time is gonna be required for you to do that process because you'll have a process and you'll have it in place. Important thing to remember, guys, as I'm going through this process, what I do is if I see, as I look for high rates of return, I'm writing the names of those mutual funds down and the ticker symbol so that I can quickly go back and look at this later. Be writing things down or putting them in a Microsoft Word document, in an Excel document, just somewhere as you go so that you don't have to look back again later and be like, hey, what was that mutual fund I wanted to look at? So that's my word of advice for you. Okay guys, if you liked the video, make sure to drop a like. If you guys are not already subscribed to this channel, make sure you hit the subscribe button down below. Our focus and mission of this channel is to help you improve your financial position, career, and life. And we do that by teaching personal finance, investing, taxes, and skills for career and life success. And we do that every single week. So make sure you don't miss any of our future videos in this series or in any other series we produce. And thank you so much, guys, for supporting our channel. And thank you so much for taking the time to watch this video. Like I said, if you have questions, you know where to drop them. Drop them in the comment section below. The next part of this series, we're actually going to be going into detail of how to understand an investment and how I learn, the process I use to learn what a mutual fund is or what's involved in a mutual fund. And that will be key and crucial for your long-term investment success. So I hope you can join me for that next part of the series. Love you guys. Peace. Have a great week.